It always starts the same way. You take a trade, you follow your plan, the setup looks perfect, the kind of trade you've seen 100 times before, but then it doesn't go your way. The candle reverses. Your stop hits. You take a small loss. It's fine, you tell yourself. It's part of the process. But then you take another trade and another loss. And suddenly something starts to shift inside you. Your breathing gets heavier. Your chest tightens. You start to feel that burn, that mix of anger and disbelief. You were right. The market was wrong. You stare at the chart. You can't walk away. You tell yourself, I'll get it back. You double your size. You stop looking for clean setups. You just want to make it right again. That's when it happens. You're no longer trading your strategy. You're trading your emotions. And in that moment, your trading plan disappears. Your rules vanish. All that's left is a storm inside your head. Frustration, anger, and a desperate need to fight back. You're no longer trading the market. You're fighting it. And the market always wins. This is revenge trading, the silent account killer. It doesn't show up in your strategy. It doesn't care about your technicals, your indicators, or your back tests. It hides in your emotions. It feeds on your pain. It whispers in your ear, just one more trade. You can make it back. Don't let the market beat you. And the more you listen, the deeper you fall. Revenge trading isn't about greed. It's about pain. The pain of being wrong, of losing control, of needing to fix what the market just broke. Every trader who's ever blown an account has felt this, that cold, sinking feeling in your stomach, the shaking hands as you click buy again, even though you know you shouldn't, the silence after another loss, followed by that one thought, what have I done? This is the moment that separates professionals from everyone else. The pros step back, they breathe, they accept the loss and protect their capital. The amateurs, they fight back. But the truth is, you can't fight the market. You can only fight yourself. In today's episode, we'll dive deep into the psychology of revenge trading, why your brain tricks you into it, why it feels so irresistible, and how to finally break the loop before it destroys your account and your confidence for good. Because until you master this, no strategy in the world can save you. This is revenge trading, the silent account killer. So, what exactly is revenge trading? It's one of the most common and most destructive psychological traps in trading. Revenge trading happens when you try to win back your losses immediately after a losing trade. It's when logic takes a back seat and emotion grabs the wheel. It's not part of your plan. It's not part of your strategy. It's an emotional reaction, a fight or flight response, dressed up to look like a trading decision. Let's break that down. You take a loss. Your brain perceives that loss not as a normal event, but as a threat. It's wired that way. Losing money triggers the same biological response as physical pain. Your amygdala, the part of the brain that processes fear, fires up instantly. Adrenaline spikes. Cortisol floods your system. Your body shifts into survival mode. And in survival mode, your rational thinking, your prefrontal cortex, starts to shut down. You stop seeing charts. You start seeing danger. You stop thinking about probabilities. You start thinking about payback. And that's the exact moment you enter the revenge trading loop. Your mind says, I'll get it back. But underneath that thought lies something deeper, a wound to your identity. You're not just reacting to a financial loss, you're reacting to what that loss means about you. You start to think, how could I be so stupid? I can't believe I missed that setup. I knew it was going to reverse. The pain isn't from the money. It's from the ego. And your ego can't stand to be wrong. So it pushes you to act, not to recover your balance, but to restore your pride. That's revenge trading in its purest form. It's not about the chart. It's not about the market. It's about your emotional need to undo the pain of being wrong. The moment you hit buy or sell in that state, you've already lost because now you're no longer trading the probabilities. You're trading your emotions. You've gone from systematic to reactive, from strategic to emotional, from trader to fighter. And the market doesn't care how angry you are. The market doesn't care that you're trying to get even. It just keeps moving, indifferent, unpredictable, ruthless. The more you fight it, the deeper you sink. Here's what usually happens next. You take a losing trade. You immediately open another one, maybe even in the opposite direction. You double your size, widen your stop, or skip it altogether. You tell yourself, this is the one that fixes everything. But instead of fixing it, you dig a deeper hole. The losses pile up faster than you can process them. Your confidence collapses, your focus blurs. You're now trapped in a psychological spiral, a cycle of pain, anger, and desperation. Every new trade feels like redemption. Every loss feels like humiliation. You start clicking without thinking. You stop following your edge. You become addicted, not to winning, but to the feeling of trying to win back. That's why revenge trading is so dangerous. It's not just an impulsive trade, it's an emotional addiction. Your brain starts to crave that dopamine hit, that rush of possibility that maybe this next trade will erase the pain. But it never does. Because even if you win that revenge trade, the damage is already done. You've reinforced the loop. Your brain learns, when I lose, I fight back. That becomes your new pattern. So next time you take a loss, you do it again. That's why so many traders can't stop. They think it's about strategy, but it's about conditioning. You're training your brain to associate pain with action. But the truth is, every time you act out of pain, you lose a piece of your discipline. Let's be clear. Revenge trading doesn't only happen to beginners. Even professionals can fall into it. The difference is, pros recognize it faster. They see the signs: elevated heartbeat, tight chest, the urge to trade just one more time. And instead of clicking that button, they stop, they step away, they breathe, they reset, because they know the truth. Revenge trading isn't about making money, it's about losing control. You might think you're fixing your mistake, but you're actually repeating it. You might think you're regaining confidence, but you're feeding your emotional addiction. And in the end, every revenge trader learns the same painful lesson. The market doesn't owe you anything. It doesn't care how much you've lost, how many hours you've studied, or how deserved your win feels. The market doesn't give, it only reacts, which means your only real weapon is control. Control over yourself. Because once you lose that, no system, no mentor, no signal can save you. That's why revenge trading is called the silent account killer. It creeps in quietly, one emotional decision at a time. And before you notice, it's taken your capital, your confidence, and your passion for trading. But here's the good news. The same way your brain learned this destructive loop, it can also unlearn it. In the next part of this episode, we'll explore the psychology behind revenge trading, what's happening inside your brain, and why understanding it is the first step to breaking free. Because trading mastery isn't about beating the market, it's about mastering yourself. This is where that journey begins. To understand why revenge trading happens, you have to look beyond the charts and into your brain. Most traders think trading is about strategy, indicators, patterns, entry, and exit rules. But the truth is, every trade begins in the mind. Behind every click, there's chemistry. Behind every impulse, there's a biological reaction millions of years old. When you lose a trade, your brain doesn't see a financial event. It sees danger. The same circuits that once kept our ancestors alive on the savannah are now firing while you sit in front of a screen. The moment your stop loss hits, your amygdala lights up, the brain's emotional alarm system. It screams, "Threat detected." Instantly, adrenaline and cortisol flood your bloodstream. Your heart rate spikes. Your breathing shortens. Your muscles tighten. You're ready to fight or run. But there's nowhere to run. The enemy isn't a predator. It's a red candle. And that's where the problem starts. Your brain wants to do something, anything, to remove the pain of loss. That impulse is older than logic itself. In survival mode, your prefrontal cortex, the rational decision-making part of your brain, begins to shut down. The deeper the emotional trigger, the weaker your logic becomes. So instead of stepping back, breathing, and accepting the loss, you react. You fight back. You click buy or sell again, not because it makes sense, but because it feels like relief. This is what neuroscientists call emotional hijacking. The primitive part of your brain hijacks your rational control center. The market becomes the threat. Your loss becomes personal, and revenge becomes your defense mechanism. But here's the paradox. Every time you act on that impulse, you reinforce it. Your brain learns through repetition and reward. If you revenge trade and win, your brain gets a powerful dopamine hit. Dopamine is the chemical of maybe. It's what gamblers chase, the thrill of uncertainty that could turn pain into pleasure. So, the next time you lose, your brain remembers, wait, last time I fought back, it felt good. You're now conditioning yourself to repeat the cycle. Lose, fight, win, relief, lose again, fight harder. That's how addiction is born, not to profit, but to the emotional roller coaster itself. And when you finally lose big, your brain doesn't register the full danger right away. It's still chasing the chemical high of getting even. Think about it. How many times have you told yourself, I know I shouldn't trade right now, but I just need one win to feel better? That's the dopamine talking, not you. Meanwhile, cortisol, the stress hormone, is still in your bloodstream. It keeps you tense, restless, unable to think clearly. You might not realize it, but you're now operating from a place of emotional exhaustion. Psychologists call this ego depletion. When your mental energy is drained, your self control collapses. In this state, you're highly suggestible. Every candle looks like an opportunity. Every movement feels personal. You're no longer analyzing, you're reacting. It's like driving in a storm with fogged up windows and hitting the gas instead of the brakes. The tragic part? The more experienced you are, the harder this hits, because skilled traders believe they should know better. Their ego is tied to competence, not ignorance. So when they make a mistake, it feels like betrayal, a personal failure. And the brain can't stand that contradiction. It wants to erase it immediately. That's why revenge trading isn't a beginner's problem. It's a human problem. It's what happens when emotion overpowers awareness. The same brain that helped you evolve is now sabotaging you in front of a chart. But here's the good news. Once you understand what's happening inside your head, you can start to interrupt it. You can't stop the emotional surge, but you can recognize it. You can learn the difference between a chemical urge and a trading signal. Awareness is the first step toward control. Let's visualize it for a moment. Imagine two circuits inside your brain. One is fast, emotional, impulsive. It wants to act now. The other is slow, rational, deliberate. It wants to analyze. In a calm state, these two work together. The rational brain leads, the emotional brain supports. But under stress, the roles flip. The emotional brain takes over. The rational brain becomes the passenger. That's revenge trading. You're watching your emotional brain drive your account straight off a cliff while your rational brain screams from the back seat. The key is not to fight the feeling. You can't outthink chemistry. The key is to create space between emotion and action. That's where awareness comes in. When you can pause, even for 10 seconds, you give your prefrontal cortex time to reboot. You give logic a chance to return. This is why professional traders have rules like take a 15-minute break after a loss or stop trading after 2 consecutive red trades. They're not being disciplined for discipline's sake. They're protecting their neurochemistry. They know that after a loss, the brain is biologically incapable of objective decision-making for a short period. So they build systems that protect them from themselves. That's the real edge, not an indicator, not an algorithm, but a mind that understands its own weaknesses. Every trader has blind spots. The amateurs ignore them. The professionals design around them. Revenge trading thrives in the shadows, in that split second between pain and reaction. But once you bring awareness into that space, it loses its power. The urge will still whisper, get it back, but you'll recognize it for what it is, a reflex, not a strategy. And that's the beginning of emotional mastery. So the next time you feel that burn in your chest after a loss, remember this. It's not the market attacking you. It's your biology trying to protect you in the wrong context. Smile, breathe, step away. Let the chemicals fade. Let logic return. Because the real battle isn't on the chart, it's in your mind. And every time you choose awareness over impulse, you reclaim your power as a trader. That's how you stop revenge trading. Not by suppressing emotion, but by understanding it. In the next part of this episode, we'll look at a real-life example, how a single loss spirals into a meltdown, and exactly what happens step by step. This is where theory meets reality. This is where psychology turns into profit or destruction. The choice, as always, is yours. Let me tell you a story. His name was Mike. Mike wasn't a beginner. He had been trading for 3 years. He had a plan, a strategy, and what he thought was emotional control. One Monday morning, everything looked perfect. The market opened strong, his analysis lined up, and he entered a long position on EUR/USD. Confident, patient, focused. But 10 minutes later, the price reversed. It hit his stop. 1%. No big deal. Mike shrugged it off. It's just one loss, he said. Then he saw the next candle, a perfect bullish engulfing bar. Damn. I was right. Just too early. His heart started to race. That's when the whisper began. You can get it back. Without even realizing it, Mike entered again. Same pair, double the size. This time, it shot up quickly. He was instantly in profit. See, I knew it. The rush of dopamine hit like a wave. His brain flooded with relief, validation, pride. But the candle stalled and then dropped again. It hit his stop, magna 3%. A small loss turned into frustration. He leaned back in his chair. His breathing got shallow. His eyes fixed on the chart. Okay, no way I'm ending the day red. I'm not that guy. He opened another trade. This time, no stop loss. I'll manage it manually, he told himself. The price went up a little, then down, then up again. He started moving his stop around, dragging lines on the chart, trying to make the setup fit his emotions. Within 30 minutes, he was down another 5%. The feeling inside his chest was no longer frustration. It was panic. His rational brain, the one that used to analyze, plan, and wait, had gone silent. Now it was just the voice. Get it back. Get it back. Get it back now. So he opened one more trade, this time on gold, bigger size, faster tempo, more risk. The candle shot up, green. His pulse steadied. Yes, this is it. Then, without warning, a sharp red drop. 10%. His heart sank. His hands were shaking. He stared at the P&L, refusing to close. It'll bounce. It has to bounce. But it didn't. By the end of that day, Mike's account was down 23%. He had broken every rule he'd ever set for himself. Risk management, max drawdown, emotional pause, all gone. When he finally shut his laptop, he felt numb. His body was still in fight or flight mode, adrenaline burning through his system. But his mind was silent. That's what revenge trading does. It burns you out from the inside. The next morning, Mike woke up early, determined to fix it. He looked at his journal, full of detailed plans and notes, and ignored it. He opened his platform again, staring at the same charts as yesterday. He wasn't looking for setups anymore. He was looking for revenge. Every tick of price movement triggered something deeper. Resentment, anger, shame. He started clicking faster. Buy, sell, buy again. It was no longer trading. It was emotional chaos. Within 2 hours, his account dropped another 15%. That's when the shock hit, the realization. What have I done? That single question echoed in his head for days. Mike didn't lose because he didn't understand the market. He lost because he didn't understand himself. You see, revenge trading doesn't happen in one big explosion. It's a slow burn, a series of tiny emotional compromises. Uh, it starts when you say, I'll just break this one rule. Then it becomes, I'll just add a little more size. And before you know it, you're miles away from your trading plan, operating on pure emotion. It's like standing in quicksand. The harder you struggle, the faster you sink. Mike's story isn't unique. It's every trader's story, just in different forms, different days, different markets. The truth is, the markets don't destroy traders. Traders destroy themselves through emotional blindness. When you lose control, the market simply provides the stage for your psychology to play itself out. Every blown account started as a psychological impulse. Every major drawdown began with one small emotional decision. That's why revenge trading is so dangerous. It disguises itself as taking control, when in reality, it's losing control. But there's another layer to Mike's story, one that most traders never talk about. After his account dropped nearly 40%, he didn't stop trading because of the money. He stopped because of the shame. He couldn't look at himself. He avoided his trading friends, stopped journaling, ignored charts for weeks. It wasn't financial pain that broke him. It was emotional pain, the feeling that he had betrayed himself. That's what revenge trading really does. It's not the lost dollars, it's the lost trust in your own discipline. But here's the most powerful part of Mike's story, the part that can change yours. After a few weeks, he came back, not to trade, but to reflect. He opened his journal. He looked at every entry from that meltdown week. He noticed something shocking. His notes before the losses were calm, analytical, logical. After the first loss, the handwriting changed, messy, rushed, emotional. That's when he realized the market didn't change. He did. He started journaling his emotions instead of just his trades. He added a cool-down rule, 30 minutes of silence after every loss, and slowly his discipline returned. His edge wasn't his strategy, it was self-awareness, because that's what separates those who quit from those who evolve. Pain is inevitable in trading, but suffering is optional if you learn from it. Mike's story is the mirror we all need to look into. The market doesn't punish us. It simply reflects what's already inside us. If there's fear, it will expose it. If there's ego, it will test it. And if there's revenge, it will amplify it until you either break or wake up. Every trader has their mic day. The question is, what will you do after yours? In the next part of this episode, we'll uncover how to recognize when you're entering that spiral before it's too late. Because awareness at the right moment can save not just your account, but your career. The hardest part about revenge trading is that you usually don't realize you're doing it until it's too late. By the time you notice, you've already broken your plan, increased your size, and taken 3 trades you never should have touched. That's why awareness, real-time awareness, is your greatest weapon. So how do you know when you've crossed the line from logical trading to emotional reaction? There are signs, always. They're subtle at first, but if you learn to see them, you can stop the spiral before it begins. Sign number 1, you feel urgency. After a losing trade, your mind starts racing. You can't sit still. You feel this burning need to do something, to fix it, to prove you're still right, to make the loss go away. You tell yourself, I just want to catch the next setup. But deep down, it's not about the setup. It's about revenge. Your breathing changes, your shoulders tense. You're no longer analyzing the market. You're reacting to pain. That's the first red flag. Sign number 2, you break your own rules. You move your stop just a little bit. You enter early before confirmation. You skip journaling because this one doesn't count. Each small decision feels harmless, but together they form a pattern, a quiet rebellion against discipline. Ask yourself this: am I trading my plan or my emotions? If the answer isn't immediate, you already know. Sign number 3, you increase position size impulsively. Most traders don't double size because of confidence. They double size because of fear. Fear of missing out, fear of staying wrong, fear of falling behind. It's a silent form of panic dressed up as conviction. Remember this: confidence builds slowly. Impulses happen fast. If your trade size jumped faster than your analysis, it's not strategy, it's emotion. Sign number 4, you stop accepting losses. You move your stop further. You start holding and hoping. You're no longer protecting capital, you're protecting your ego. Every second you refuse to accept the loss, you're feeding the fire that burns your account. It's no longer about money, it's about being right. And the market doesn't reward the need to be right, it rewards discipline. Sign number 5, your self-talk changes. Listen carefully to the voice in your head after a loss. Does it say, okay, that was part of the plan, let's review? Or does it say, I'll show this market? When you start personifying the market, treating it like an opponent, you've already lost the psychological game. The market doesn't care about you. It doesn't even know you exist. The fight is never between you and the market. It's always between your emotions. That's the real battleground. And here's the 6th sign, the most dangerous one. You stop feeling pain. After a series of losses, some traders go numb. They click trades with no emotion, almost robotic, detached. But that's not control. That's emotional burnout. When you stop feeling anything, it means your nervous system is overloaded. Your brain has shut down emotional feedback as a defense mechanism. And when you can't feel, you can't evaluate. You've disconnected from the market and from yourself. If that happens, it's not time to trade more. It's time to stop, take a break, step away, reset. Because the next trade you take in that state isn't a trade. It's an act of self-destruction. Revenge trading always begins with emotion, not logic. So here's a simple framework, a mental checklist you can use every time you lose a trade. What am I feeling right now? Frustration, anger, panic, or clarity? Is my next trade part of my plan or is it a reaction? Have I taken time to breathe, reset, or reflect before re-entering? If you can't answer yes to that last question, don't trade. Because in trading, awareness is more powerful than any entry signal. The best traders aren't emotionless, they're emotionally aware. They still feel the urge to fight back after a loss. They still hear the whisper of revenge, but they recognize it. They name it. And by naming it, they take away its power. That's emotional mastery. It's not about suppressing your emotions. It's about understanding them so deeply that they can no longer control you. You might ask, but what if I still feel that urge to make it back? You will. We all do. But the key is this: don't act from the urge. Observe it. Awareness doesn't erase the emotion. It gives you space to choose a better response. The more you practice recognizing those micro moments, the tension in your chest, the shallow breath, the voice that says one more trade, the faster you catch yourself. Over time, that awareness becomes your new reflex. Instead of reacting to pain, you respond to data. Instead of chasing revenge, you chase discipline. Instead of fighting the market, you align with it. That's what separates traders who survive from those who disappear. The market will always tempt you to react. It will always test your patience, your ego, your identity, but the market cannot force you to click. Only you can do that. And that moment, that single second between impulse and action, decides your fate. So the next time you feel that rush after a loss, remember this line. If I'm trading to fix my feelings, I'm not trading. I'm coping. Close the chart. Stand up. Breathe. You're not losing the opportunity, you're regaining control. Because revenge trading doesn't start on the screen, it starts in your nervous system. And the sooner you learn to recognize the signs, the sooner you stop it before it stops you. In the next part of this episode, we'll break down exactly what revenge trading costs, not just in money, but in energy, focus, and mental health. Because every impulsive trade has a price, and most traders have no idea how much they're really paying. Every act of revenge trading comes with a cost. You might think that cost is the money you lose, but that's only the surface. The real price is deeper and far more expensive. Let's start with the obvious, the financial cost. Every time you break your rules to get it back, you're no longer trading your edge. You're gambling against probability and against yourself. Studies show that most revenge trades are taken with 2 to 3 times the normal position size. That means even if your system has a positive expectancy, one emotional impulse can erase weeks of consistency. And here's the dangerous illusion. Sometimes that revenge trade wins. You get the dopamine hit, the rush of validation, the feeling of I'm back. But that single win doesn't restore discipline, it destroys it. Because it teaches your brain the wrong lesson. Breaking my rules works. From that moment on, your system is no longer the strategy you built. It's the emotions you feed. That's the hidden cost of inconsistency. Every time you act emotionally, you add noise to your data. You can no longer trust your results, your stats, or your confidence. Your back test becomes meaningless. Your metrics lie. And slowly, your account equity isn't the only curve going down. Your belief in yourself follows it. Then comes the psychological cost. After a revenge trade, there's always a moment of silence. The adrenaline fades. The screen feels too bright. You look at the numbers, the red, the loss, the damage, and something heavier hits you. Shame. Not frustration, not anger. Shame. The quiet voice that says, I knew better, and I still did it. Shame is the heaviest emotion a trader can carry. It doesn't just hurt, it corrodes. It eats away at your confidence, your trust, your self-image. The next time you open a chart, you hesitate. You second guess your setups. You see ghosts of past mistakes in every candle. That's the emotional debt of revenge trading, the pain that lingers long after the loss is gone. And when shame turns into self-doubt, it infects everything. You stop journaling because you don't want to face the truth. You stop reviewing your trades because it hurts too much to look. You start avoiding the mirror. That's when traders quit, not because they run out of money, but because they run out of belief. Now, let's talk about the physiological cost. Every time you enter a revenge trade, your body goes into fight or flight. Cortisol rises, your heart races, blood rushes to your limbs, not your brain. You're literally dumber in that moment. Neuroscience proves that high stress suppresses activity in the prefrontal cortex, the part responsible for logic, planning, and impulse control. The more stressed you are, the less capable you become of objective thought. That's why emotional trading feels like tunnel vision. You see price, but not context. You see movement, but not risk. And after hours in that state, your body crashes. You feel drained, jittery, empty. You can't sleep. Your appetite changes. You wake up thinking about charts and losses. It's not just mental fatigue, it's chemical exhaustion. Your nervous system wasn't designed for constant stress loops, yet that's exactly what revenge trading creates. One bad day turns into anxiety. A week of anxiety turns into burnout. You start losing joy, not only in trading, but in life. You skip workouts. You stop talking to friends. You stare at screens long after the market closes. You tell yourself you're being dedicated, but deep down, You're just trapped in survival mode. That's the human cost. Revenge trading doesn't just drain your account, it drains your energy, your time, your relationships. Every impulsive click steals minutes of your life you'll never get back. And for what? To prove something to a market that doesn't even know your name. That's the cruel irony. Revenge trading feels like taking control, but in reality, it's surrendering it. The market becomes the master. You become the servant. You react when it moves. You panic when it turns. You obey your emotions instead of your plan. Every revenge trade says the same thing. I don't trust myself. And trust is everything in trading. Without it, you can't follow a system, you can't hold a position, you can't grow. That's why the real cost of revenge trading isn't the dollars lost, it's the loss of self-trust. And self-trust, once broken, takes time to rebuild. But here's the truth you need to remember. The cost of revenge trading is optional. Every trader pays tuition to the market, but only the unaware keep paying interest. The moment you recognize what's happening inside you, you stop being a victim of the market and start becoming a student of yourself. Losses will still come, pain will still come, but they'll no longer own you. You'll see them for what they are: information, feedback, a mirror. The greatest traders in history didn't become great because they avoided pain. They became great because they refused to let pain turn into revenge. They learned to pause, to reflect, to respond instead of react. They paid the cost once and then learned the lesson forever. The amateurs keep paying. Which one will you be? In the next part of this episode, we'll explore why you can't simply stop revenge trading and why trying to suppress it only makes it stronger. Because to break free, you don't fight emotion, you understand it. Every trader who has ever blown an account has said the same thing. I knew I shouldn't have done it, but I couldn't stop. Why? Because revenge trading isn't a choice, it's a pattern. Once your brain has connected pain with action, the loop begins. You lose, you feel pain, you act, you feel relief, you reinforce the loop. Every repetition strengthens the neural pathway, like carving a groove into your mind. That groove doesn't care about your logic or your plan. It runs on automatic memory. This is why telling yourself to just stop doesn't work. You're trying to use logic to override a reflex. Think about it like touching a hot stove. Your body pulls away before your mind even registers pain. Revenge trading is the same. The click happens before awareness does. It's not a lack of knowledge, it's a lack of control between trigger and response. When you take a loss, your brain interprets it as danger. The amygdala fires. Cortisol spikes, and milliseconds later, you're already in the trade again. By the time you think, maybe I shouldn't, it's already too late. That's the nature of a conditioned response. The more often you react that way, the faster the loop becomes. What started as a conscious decision turns into an unconscious habit. And habits don't disappear through willpower. They're replaced through repetition of new behavior. Here's what's really happening. Deep in your brain, the basal ganglia stores automated routines, habits that save energy. Once a behavior is learned, the brain offloads it there. When you experience a trigger, a loss, the basal ganglia fires the pre-programmed sequence. Open chart, double size, click. That's why the urge feels mechanical, because it is. You're literally running code your brain wrote during past losses. And each time you obey that urge, the code gets stronger. That's why even traders who understand psychology still fall into the trap. Knowledge lives in the prefrontal cortex. Habits live in the basal ganglia. Under stress, the cortex shuts down and the ganglia takes over. So when you say, I know better, you're right. But in that moment, the part of you that knows isn't in control. Emotion, logic, impulse, intention. That's why suppression never works. You can't fight biology with willpower. The more you try to force yourself not to trade, the more tension you create. That tension becomes another form of stress, which triggers the same loop again. It's like trying not to think of a pink elephant. The harder you resist, the stronger the image becomes. The solution isn't suppression, it's substitution. You have to replace the pattern, not repress it. After a loss, instead of letting the brain run the old code, click again, you give it a new command. Pause, breathe, observe. It sounds simple, but biologically, it's powerful. When you breathe deeply for 10 seconds, you activate the parasympathetic nervous system, the calm circuit that lowers cortisol and re-engages the rational brain. That tiny pause gives your prefrontal cortex time to wake up and regain control. That's where choice lives. Without that pause, there is no choice, only reaction. So the first step isn't to stop trading emotionally. The first step is to notice that you're emotional. Awareness breaks automation. Every time you catch yourself mid-urge, that second before clicking, and you say, "This is a revenge impulse," you weaken the pattern. The brain rewires through repetition. The more often you interrupt the loop, the weaker it becomes. Think of it like forging a new path through a forest. At first, the old trail, the emotional reaction is well worn. It's easy to walk. The new trail, awareness, is overgrown and hard to see. But each time you take the new path, it gets clearer. That's neuroplasticity in action, the brain's ability to reshape itself through experience. And that's how you truly change your trading behavior. Not overnight, not through motivation, but through consistent interruption of the old loop. Here's another truth. Your emotional triggers never disappear. You'll always feel that flash of anger after a loss. You'll always feel that itch to win it back. Mastery doesn't mean those feelings vanish. It means they no longer control what you do. Professionals still feel the same impulses as beginners. They've just trained themselves to respond differently. Where the amateur clicks, the professional breathes. Where the amateur reacts, the professional reflects. That difference, one breath, is the gap between survival and self-destruction. The more you practice that gap, the larger it grows. And in that space, freedom lives. This is why discipline isn't punishment. It's protection. It's the shield between your emotions and your capital. You're not trying to become emotionless. You're trying to become emotionally aware. So you can trade from consciousness, not compulsion. Remember, trading doesn't expose your weakness. It magnifies it. Whatever emotion you haven't mastered, fear, greed, anger, the market will find it and feed it back to you. Revenge trading is simply anger amplified through leverage. You can't silence that anger, but you can listen to it. You can ask, what is this trying to tell me? Maybe it's telling you that your self-worth is tied to winning. Maybe it's showing you that your risk is too high or your expectations unrealistic. In that sense, the impulse to revenge trade isn't your enemy. It's information. Once you see it that way, the energy shifts. You stop fighting yourself and start understanding yourself. That's where real growth begins. So next time you feel that urge, that magnetic pull toward the mouse after a loss, don't say, "I must stop this." Say, "I see you." Take one deep breath. Smile. Not because you enjoy losing, but because you just caught the habit trying to run your life. That's victory. Because you can't change what you don't see. But once you see it, you're no longer a prisoner of it. In the next part of this episode, we'll explore how to break that cycle completely. With a step-by-step framework, you can practice every day to retrain your brain and rebuild discipline. Because freedom in trading isn't about controlling the market. It's about mastering the one thing you can control: yourself. You can't think your way out of revenge trading. You have to train your way out. Because emotion isn't something you erase with logic. It's something you reprogram through repetition. The goal isn't to never feel that urge again. The goal is to recognize it, pause, and choose differently. To break the cycle, you need a system, a ritual for the moments when your emotions start to take control, a structure stronger than impulse. Here's the framework I call the 4 steps to breaking the cycle. It's simple, but it works because it's built on psychology, not motivation. Step 1, pause. After a losing trade, your instinct is to act immediately, to fix, to fight, to win it back. That's your nervous system screaming for relief. But the moment you pause, you interrupt the loop. You take back power. It doesn't have to be long. Even 30 seconds is enough. Don't look at the chart. Don't touch the mouse. Just stop. Let the silence expand. Your brain wants to close the gap between pain and action. Your job is to keep that gap open, because in that gap, awareness grows. Take that pause like a professional takes a breath before a performance, a signal that you're in control. Step 2, breathe. Not the shallow panic breath that comes after a loss, but a deep, conscious breath. Try this. Inhale for 4 counts, hold for 4, exhale for 4. Do it 3 times. As you breathe, feel the physical shift in your body. Your shoulders drop, your heartbeat slows, your thoughts begin to quiet. What you're doing isn't spiritual, it's biological. You're activating the parasympathetic nervous system, the part of you that calms stress and restores balance. Each breath lowers cortisol, raises oxygen to the brain, and brings the rational mind back online. Remember, clarity lives on the other side of breath. Step 3, journal. This is where awareness turns into data. Write down what just happened, not just the trade, but what you felt. Don't filter it. Don't judge it. Just write. I was angry. I felt disrespected by the market. I wanted to prove I was right. The moment you name the emotion, it loses its grip. Psychology calls this labeling theory. When you put words to a feeling, your brain shifts from the emotional center, amygdala, back to the rational center, prefrontal cortex. You literally move from chaos to clarity just by writing. Over time, your journal becomes your mirror. You'll start to see patterns. Certain times of day, you're more reactive, certain losses that trigger stronger emotions, certain thoughts that repeat before mistakes. That awareness is priceless. It's not about the words, it's about building a relationship with your own mind, because you can't master what you ignore. Step 4, reassess. Once you've paused, breathed, and journaled, you're no longer the same trader who lost that trade. You've shifted from emotional to analytical. Now, and only now, can you decide, do I actually have a valid setup to trade again? Pull up your plan. Review your checklist. Ask, if I showed this setup to my future self, would they approve it? If the answer is anything less than a confident yes, don't trade. Go for a walk. Stretch. Close your platform for the day. Protect your capital like it's sacred, because it is. This 4-step process, pause, breathe, journal, reassess, seems small, but it's powerful because it transforms reaction into response. Over time, it rewires your brain. You're training yourself to respond consciously instead of reacting automatically. It's mental conditioning, the same kind professional athletes, soldiers, and surgeons use under pressure. The only difference is your battlefield is a chart, but the discipline is the same. Let's be real. The first few times you try this, it won't feel natural. You'll want to skip the pause. You'll want to rush through the breathing. That's okay. Every time you even attempt to interrupt the cycle, you're winning. You're teaching your brain that it has a choice. And the more you practice, the faster that choice appears. Soon, what used to take minutes will take seconds. You'll feel the emotion rise, and instead of reacting, you'll breathe. That's how mastery looks from the inside. Not emotionless, but emotionally intelligent. Remember, the goal isn't perfection, it's progress. Each time you catch yourself 1 second earlier than before, that's growth. Each time you pause instead of click, that's victory. The trader who can pause wins, because revenge trading only thrives in urgency. Slow down, and it dies. This is how you break the loop, not through force, but through awareness and deliberate habit. Over time, this process becomes automatic. The same brain that once pushed you into chaos will now protect your calm. That's neuroplasticity in motion, pain transformed into discipline. So the next time you feel that familiar fire after a loss, remember, don't fight it. Don't feed it. Just follow your 4 steps. Pause, breathe, journal, reassess. That's not just a method, it's a mindset. It's how amateurs become professionals, because the market doesn't care how smart you are. It rewards those who can stay present when others lose control. In the next part of this episode, we'll explore how to reframe your thinking, transforming loss into feedback and frustration into focus. Because once you master how you see a loss, you'll never have to fight one again. Every trader wants to avoid pain. But what if pain isn't your enemy? What if pain is your greatest teacher? In trading and in life, suffering doesn't come from what happens to you. It comes from how you interpret what happens. The loss itself doesn't destroy you. The meaning you attach to it does. This is where cognitive reframing comes in, the art of changing the way you see a situation so it changes what it means to you. Let's break that down. When you take a losing trade, your default thought might be, I failed. I was wrong. I'm not good enough. That thought triggers shame. Shame triggers revenge. Revenge leads to destruction. But what if you reframe that loss? What if instead of I failed, you said, I received feedback? Because that's all a loss really is. Information about what didn't work this time. When you start to see every trade as feedback, you remove the emotional sting. You stop taking it personally. You start taking it professionally. Think about how scientists work. They run experiments, collect data, analyze results. When the experiment fails, they don't say, I'm a bad scientist. They say, interesting, now I know what doesn't work. That's reframing, and that's exactly how great traders think. Because the truth is, you can't control outcomes. You can't control if the next candle goes up or down. You can't control if the market respects your level or breaks right through it. Something, but you can control how you respond and how you interpret what happens. That's where your power lives. You see, your brain loves patterns. When it sees a loss, it instantly looks for a story, something to explain the pain. The market tricked me. I shouldn't have trusted that setup. I'm never trading this pair again. The brain does this to protect you. But in doing so, it creates emotional shortcuts that distort reality. Reframing rewrites that story. Instead of the market hurt me, you say the market gave me data. Instead of I was wrong, you say the setup failed, not me. That small shift in language changes your entire state because words shape perception and perception shapes behavior. Let's take an example. Imagine two traders both lose the same trade. Trader A says, "This market is rigged. I'm so unlucky." Trader B says, "That setup didn't perform well. I'll log it, analyze it, and adapt." Trader A feels anger. Trader B feels curiosity. Trader A looks for revenge. Trader B looks for insight. The result, Trader A repeats mistakes. Trader B evolves. The same event, different interpretation, different future. That's the power of reframing. Now, reframing isn't about lying to yourself or pretending losses don't hurt. It's about telling a truer story, one that empowers instead of paralyzes. Here's how you can practice it. After every loss, write down your first emotional reaction. Maybe it's, "I can't believe I did that," or "This always happens to me." Then pause. Ask yourself, what's another way to see this? You might write, "This trade failed, but it showed me where my bias took over. This loss taught me to respect my stop. This was a tuition fee for awareness." Each reframe turns pain into wisdom. That's how professionals grow, not by avoiding losses, but by harvesting them. They mine every loss for gold, because hidden inside every red number on your statement is a lesson that can change your future, but only if you look. You can even reframe revenge itself. When you feel the urge to fight back, don't shame yourself for it. Instead, "This is my brain trying to protect me. It means I care." That's self-compassion, the secret weapon no one talks about in trading psychology. Because self-compassion isn't weakness, it's awareness without judgment. And without judgment, you can see clearly. You can recognize that the urge for revenge isn't bad, it's just misplaced energy. So you redirect it. You channel that energy into learning, refining, improving. You take what was once destructive and turn it into fuel. That's transformation. Let's anchor this with a few reframes you can use today. I need to win it back. I need to protect what I still have. I was wrong. I gathered more data. The market hurt me. The market revealed something I didn't see. I have to trade now. I have to pause now. Try saying them out loud. Feel the difference in your body. One creates tension, the other creates peace. That peace isn't complacency, it's clarity. Because from clarity comes precision, and from precision comes profit. This is why reframing is so powerful. It doesn't change the market, but it changes you. And once you change, everything you see changes with you. The chart becomes less of a battlefield and more of a feedback loop. You stop needing to control it, you start learning from it. That's when you shift from reacting to creating, from ego to evolution, from revenge to resilience. Remember this: every loss you face is a message from the market. Some messages are gentle, some are painful, but all of them are trying to make you better. Your job is to listen, not argue, because when you listen long enough, the market becomes your greatest teacher, and the trader who learns faster always wins longer. In the next part of this episode, we'll take this mindset even further and build a daily routine that makes you revenge proof. Because awareness is the first step, reframing is the second, but discipline, lived daily, is where transformation becomes permanent. Awareness gives you power, reframing gives you clarity, but without structure, both will fade because emotion doesn't vanish. It waits. It hides behind fatigue, stress, and overconfidence. That's why you need a routine, a system that protects you when your willpower can't. Discipline isn't about being perfect. It's about designing your environment so that even on bad days, you still make good decisions. So let's build your revenge-proof routine. Step 1, define your boundaries. Every professional trader has rules that protect them from themselves. The amateurs make decisions in the moment. The pros make them before the moment happens. Write your boundaries clearly. Maximum number of trades per day, maximum daily drawdown, maximum emotional stress signal. For example, if I hit 3 losing trades in a row, I stop trading. If I feel my heartbeat increase or my breathing shorten, I take a 15-minute break. If I break one rule, I stop for the day, not to punish myself, but to protect my psychology. These boundaries aren't restrictions, they're safety nets. The market will test them, but the moment you honor them, you become the trader your past self promised to be. Step 2. Start your day with intention. Most traders start their session by opening the charts. Professionals start by opening their mind. Before you look at price action, check your state. Ask yourself 3 questions. How do I feel today? Calm, distracted, anxious, focused. What is my energy level? High, medium, or low? What is my purpose today? To trade well or to chase results? If your answers reveal stress, fatigue, or emotional noise, it's better to skip the session than to pay the market's tuition fee. You can't trade well from a stormy mind. Professionals know mental capital is as important as financial capital. So protect it. Start each session with a brief ritual, even 1 minute of breathing, stretching, or journaling. It's not about superstition, it's about creating emotional consistency, because consistency in state creates consistency in results. Step 3. Use a pre-trade checklist. This is where logic becomes your anchor. Before every trade, go through a short checklist. Is this setup part of my plan? Does the risk fit my parameters? Have I taken enough time since my last trade? Am I calm? Am I trying to prove something? If you answer no to any of these, don't trade. The checklist acts as a firewall, a barrier between emotion and execution. The traders who last decades in the market don't have stronger emotions, they have stronger checklists. Step 4. Build a post-loss ritual. This is where most traders fail. After a losing trade, they either spiral or shut down. But you can train yourself to respond differently. Have a simple ritual that triggers right after every loss. Stand up, step away from the screen, take 3 deep breaths, drink a glass of water, write 1 sentence in your journal. I accept this loss as part of the process. That's it. One small ritual, done consistently, rewires your brain to associate loss with reflection, not revenge. This is how you transform pain into progress. Hack step 5. End your session with review, not regret. When the market closes, most traders keep thinking about what they should have done. Professionals review what actually happened. They separate 2 categories: mistakes from execution, mistakes from emotion. And then they ask, what was the trigger behind this emotion? That question is gold, because once you know your triggers, you can design around them. For example, if you revenge trade after a big win, lower your next position size automatically. If you revenge trade after boredom, set a limit on screen time. If you revenge trade after missing an entry, turn off notifications. Systemize your self-awareness. That's how you turn psychology into structure. Step 6. Track emotional data like financial data. Most traders only track P&L. Great traders track P&L and E&M, emotions and mindset. Add 2 columns in your journal: emotional state, before and after trade; thought pattern, what was I telling myself? Over time, you'll see clear correlations. You'll notice that your biggest drawdowns didn't come from the market, they came from moments of emotional neglect. Once you can measure it, you can manage it. That's the secret to longevity. Step 7. Protect your downtime. A revenge-proof routine doesn't end when the charts close, because your brain needs time to recover. Schedule daily mental reset time. Exercise, walk, meditate, or spend time doing something completely non-market related. This isn't laziness, it's maintenance. Just like you can't drive a car forever without refueling, you can't trade indefinitely without rest. Your nervous system needs recovery to perform. Remember, trading is a performance profession, and like every performer, athlete, musician, or soldier, you must manage your state, not just your skill. The more you protect your energy, the more you protect your capital. That's how professionals stay sharp while others burn out. Step 8. Review weekly, not emotionally, but systemically. At the end of every week, review not only your trades, but your behavior. Ask yourself, did I follow my rules? Did I notice emotional triggers early? Did I take care of my mental energy? If you broke a rule, don't shame yourself. Study the pattern, because awareness without judgment equals growth. This is how trading transforms from gambling, into mastery. Remember this: a revenge-proof routine doesn't make you emotionless, it makes you prepared. You can't stop the storm, but you can learn to build a stronger ship, and every step of your routine, from morning check-in to evening review, becomes a plank in that ship. The goal isn't to avoid losses. The goal is to navigate them with composure. Because when others panic, you'll pause. When others fight the market, you'll flow with it. That's the mindset of a professional. And that mindset is built one routine, one breath, one decision at a time. In the next part of this episode, we'll explore the mindset of a professional trader, how they think, how they manage emotion, and why discipline isn't just a rule, it's an identity. There's a moment in every trader's journey when they finally understand it was never about the market, it was always about them. The market didn't cause their emotions, it revealed them. It didn't punish them, it reflected them. That's the day a trader begins to transform into a professional. Because professionalism in trading isn't about how much you know, it's about how you respond when you don't know. The amateur asks, how can I be right? The professional asks, how can I manage risk when I'm wrong? The amateur trades to win. The professional trades to survive and let consistency win for them. The amateur chases emotion. The professional cultivates neutrality. They understand that the market isn't an enemy. It's a mirror. If you feel fear, the market will show it to you. If you feel greed, it will amplify it. The market will always test your patience, your ego, your humility. And the professional accepts that test every single day. They don't fight it, they prepare for it. That's what mindset means, not positive thinking, not blind confidence, but clarity, the quiet conviction that you can handle whatever the market brings. Let's look closer at the difference. The amateur sees a loss and says, I'm failing. The professional sees a loss and says, I'm learning. The amateur feels pressure to prove something. The professional feels gratitude for another repetition. The amateur needs excitement. The professional seeks boredom, because boredom means they're following the plan. The amateur thinks, one trade will change my life. The professional knows 1,000 trades will build my career. That's the paradox of mastery. It's not dramatic, it's disciplined. You stop craving adrenaline and start craving accuracy. You stop needing to be right and start needing to be consistent. And you realize the goal isn't to beat the market, it's to outlast yourself. That's what separates pros from everyone else. They understand that every decision carries a cost, not just in capital, but in energy, so they conserve it. They choose patience over impulse, process over pride, structure over emotion. To the outside world, they look calm, but inside, they're warriors, disciplined, deliberate, detached. Detachment doesn't mean apathy, it means freedom from outcome. Professionals know that outcomes are random, but behavior is not. They can't control the next candle, but they can control their reaction to it. That's power. True power in trading doesn't come from prediction, it comes from presence. When you're truly present, you don't need revenge. You don't need to fix the past, you're just executing the now. And when you live in that state, trading becomes art, calm, fluid, precise. The professional's secret isn't that they don't feel emotion, they do. But they've learned to listen without reacting. When fear whispers, they breathe. When greed tempts, they wait. When loss stings, they observe. Because they understand every emotion is a message, not a command. The amateur obeys emotion, the professional interprets it. That's emotional intelligence, the real edge in trading. Tools change, markets evolve, but human behavior, it's timeless. And those who master it master everything. You see, the professional's mind isn't reactive, it's reflective. They don't ask, why is this happening to me? They ask, what can I learn from this? They don't trade to escape emotion. They trade to understand it. That's why pros grow while others repeat. The amateur blames the market. The professional takes responsibility. Responsibility doesn't mean self-blame. It means ownership, the courage to look at your results and say, hey, this is me, my mindset, my outcomes. That ownership is the gateway to mastery. Because once you own everything, nothing owns you. The professional trader isn't defined by profit. They're defined by process. The market may fluctuate, but their behavior doesn't. That consistency, day after day, loss after loss, builds something unbreakable. Trust. Trust in their plan. Trust in their process. Trust in themselves. And trust is what allows them to stay calm when everything else falls apart. Because when others panic, the pro pauses. When others doubt, the pro executes. They know that trading isn't about predicting, it's about responding. And response comes from training, not emotion. The professional knows their worth doesn't rise and fall with their P&L. Their identity isn't winner or loser. It's student of the market. Every day, they show up. Every day, they learn. Every day, they respect the game because they know this truth. The market rewards discipline, not drama. And the calm mind always sees clearer than the chaotic one. When you reach that state, revenge trading disappears, not because you forced it away, but because it no longer fits who you are. The urge to fight the market fades, replaced by a quiet sense of flow. You stop being the gambler. You start being the guardian of your capital. That's what it means to be a professional. It's not about perfection, it's about presence. Every click is intentional, every pause is powerful, and every loss is just another step toward mastery. In the final part of this episode, we'll bring it all together and talk about freedom, the moment when trading stops being a battle and becomes a journey of self-mastery. Because revenge trading is a prison, awareness is the key, and discipline is the door that leads to freedom. Freedom. It's what every trader says they want. Freedom from the job, freedom from the boss, freedom from the grind. But what most traders don't realize is that before you can be free from the world, you must first be free from yourself. Free from fear, free from ego, free from the endless need to prove something to a market that doesn't care. Revenge trading isn't just a bad habit, it's a prison, one you build from your own emotions. Every impulsive trade becomes another bar on the cage. Every time you ignore your rules, the walls close in tighter. And one day, you wake up realizing you're not trading the market anymore. You're trading your pain. You're not fighting for profits. You're fighting for validation. But here's the truth. The market has been trying to teach you all along. You don't need to fight. You need to surrender. Not surrender to the market, but surrender to reality. The reality that losses happen, that control is an illusion, that mastery begins when you stop trying to force outcomes and start learning from them. The day you stop needing the market to validate you is the day you finally become free. Because freedom isn't in winning every trade. Freedom is in knowing that a loss can't break you anymore. Think about that for a second. What if every time you lost, you stayed calm? What if every red candle was just feedback, not failure? What if the market's chaos no longer dictated your peace? That's true freedom, the kind that no dollar amount can buy, the kind that no loss can take away. You see, revenge trading is rooted in fear. Fear of being wrong, fear of missing out, fear of not being enough. But freedom is born from acceptance. Acceptance of uncertainty, acceptance of imperfection, acceptance of yourself, flaws and all. The professional doesn't trade to escape pain. They trade to understand it, because pain is information. It's your teacher, your mirror, your map. Every loss points to something, a blind spot, a belief. And when you stop running from pain, you start learning from it. That's when transformation happens. The irony is, the moment you stop chasing money, you start attracting it. The moment you stop fighting losses, you start managing them. The moment you stop needing control, you gain it, not over the market, but over yourself. That's the paradox of trading psychology. The more you let go, the more power you gain. Because mastery isn't about domination, it's about alignment. Alignment between your mind and your method, between your emotion and your execution, between who you are and who you're becoming. Trading at its core isn't a career. It's a mirror for your consciousness. Every chart reflects your psychology. Every P&L statement tells the story of your self-awareness. The amateurs look for setups. The masters look for truth. And that truth is simple. The market will never make you free. Only self-mastery will. When you understand that, everything changes. The charts look the same, but you don't. You move slower, you think clearer, you breathe deeper, you stop fighting the noise and start hearing the rhythm. You realize that trading isn't about winning or losing, it's about staying awake. Awake to your emotions, awake to your impulses, awake to the moment. That awareness is freedom, because a trader who's awake can't be controlled by the market. They can only be guided by it. And the market, in all its chaos, all its beauty, becomes your greatest teacher. So as this episode ends, remember this. Revenge trading isn't your enemy. It's your invitation. An invitation to look deeper, to meet yourself, to master yourself. Because when you conquer the urge for revenge, you're not just saving your account, you're saving your peace. You're reclaiming the one thing the market can never give you and can never take away: inner freedom, the kind that stays with you whether the chart is green or red, the kind that follows you long after the screens are off, the kind that turns trading from a battle into art. And when you reach that place, when you can look at the market with calm eyes and a steady heart, you'll realize something profound. The market was never trying to break you. It was trying to wake you up. So breathe, smile, close the chart you've already won because you finally understand the real game. And that is freedom.